Hey everyone, there was some great news that came out of Rivian's latest quarterly earnings call from management. That's what I'm going to share with you in this video here. So let's get right into it. So the R2 is the same mindset according to management and the same ethos being applied on a smaller price in a smaller form factor at a lower price point. That's the key. Now, if you're not aware, Rivian right now produces its cars. It calls it the R1 platform. So it sells the R1T pickup truck and it sells the R1S SUV. The next generation, the R2, is going to be, according to management, lower priced on a smaller form factor. So it's going to be more affordable, and more affordable means access to more customers because at its current price points, north of 65,000 per vehicle, that is arguably unapproachable for a large part of consumers. But if you bring that price point down, now you have access to many more folks who can afford to purchase your car. So that's going to be huge for Rivian should they be able to achieve that. And so management goes on and says, how does Rivian manifest at this lower price point with a smaller form factor? I can say we couldn't possibly be more excited about what's to come with R2 and really looking forward to showing that product in the early part of 2024. So it looks like management is really excited about this new R2 product that they're going to offer. They're excited about the potential, and it sounds like they think the market is going to receive it very well. They're keeping their cards close to their chest. They're not really revealing very much about the R2 other than the fact that it's going to be a smaller form factor, it's going to be lower priced. And so there isn't too much here, but we'll know more in the early part of 2024, hopefully sooner rather than later, and hopefully there are no delays and pushbacks to this timeline, because that's been the case with many EV companies when they've tried to launch a new model. They've faced constraints and delays, a lot of that due to the supply chain disruptions that happened during the pandemic. So the risks of a delay and a push out are elevated due to those supply chain problems that have lingered. A lot of them have eased and things are back to normal in a lot of areas of industry, but there's still pockets of disruption that have yet to normalize from the pandemic. So there's a chance of that. Keep an eye on that. And then the other great news for Rivian stock investors I wanted to highlight is this last one here. They delivered vehicles grew uh, they delivered vehicles grew by 60%, while gross profit per vehicle improved by about $35,000. So they increased deliveries by 60%, and simultaneously they improved the gross profit per vehicle by $35,000. I love to see that demonstration of economies of scale. As you produce more, as you sell more, your profit margin per vehicle increases because your costs come down. That's what's supposed to happen if you're doing business right. You learn your process, you get better at what you're doing, and you make more per car, on top of the fact that you utilize more of your infrastructure, and so naturally you spread your fixed costs across a greater number of units, thereby lowering the cost per unit. And so excellent. It's not always the case that companies demonstrate this kind of economies in scale. Sometimes they mess up, and sometimes costs don't improve the way companies had planned. So it's good news, it's great news for Rivian stock investors that they're actually seeing tangible evidence of this happening in front of their eyes. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.